Greetings from Baroda Mutual Fund. Equity markets are at a stage where buying opportunities exist across the board. So it is difficult to isolate any one segment like large caps or mid caps to avail these opportunities. To make the most of these opportunities, one needs to adopt a broader investment approach, combining both large caps and mid caps. But how is the investor with limited expertise going to do that? We have just the solution for investors. Indian markets have undergone sharp correction after the onset of COVID-19 pandemic and have underperformed global peers. The government and RBI have unleashed a liquidity and reform program to support the economy. Growth is likely to improve as pandemic eases and the country emerges from the lockdown. GDP growth is muted, but this is a temporary phase. Indian demographics still look good from a long-term point of view. We continue to remain constructive on Indian equities on a long-term basis. At this market level, valuations are attractive. Reinforcing this is a key metric, GDP and its relation with domestic market capitalization. Domestic market cap to GDP is at 73%. In the past, market cap to GDP has inched up to 100% and thus provides good scope for returns from current levels. With macros like IIP bottoming out, now is a good time to enter stock markets. Indian demographic story will continue to drive consumption. Large cap and mid caps perform differently over a market upturn. During the strong stock market run over 2015 to 2018, mid caps were frothy vis-a-vis large caps. Mid-cap stock valuations were up sharply, and after touching a peak of 48 times during the rally, they are presenting trading in line with large caps. History suggests that now may be a good time to invest in mid-caps. Large caps and mid-caps behave differently over a market cycle. While historically large caps show more stability, over a market cycle of ups and downs, mid-caps are more resilient. SEBI, the capital market regulator, is constantly looking at ways to make mutual fund products more simple and investor-friendly. SEBI has vide its circular dated October 6, 2017, inter alia redefined large cap, mid cap and small cap funds based on market capitalization in order to standardize scheme categories and characteristics of each category. The large and mid-cap fund has flexibility to invest typically in 35 to 65% range in large caps and mid-caps. Large caps and mid-caps are good by themselves but are more effective together. For this, we must understand how they work. Large caps have several positives and fare relatively better on volatility, earnings growth, research depth, valuations, consistency in performance. Mid-caps are favorable on points like earnings growth and potential to outperform as they are under-researched. Also, they offer an opportunity to invest in companies with niche products and services, which gives them an edge in valuations. It is common to see investors wary about investing in mid-caps due to volatility in stock prices. But it is important to remember that mid-caps are future large caps and offer potential for higher growth if spotted at an appropriate time. Like for instance, Bajaj Finserv, Britannia, Eicher Motors and Berger Paints to list a few. By investing in mid-caps earlier on, we are likely to see attractive returns as they graduate to becoming large caps. Please refer to the disclaimer on the slide. If investors wish to know which category of fund is likely to do well relatively, the past can be a good indicator. Historical performance of benchmark indices could guide in choosing an appropriate portfolio mix for investment. Historically, we have seen large and mid-cap indices perform better than large cap, mid-cap and multi-cap indices over long time frames. Please refer to the disclaimer on the slide. Fund categories have performed relatively in line with their benchmark indices. A 10-year analysis of fund category performances shows that large and mid-cap category has performed reasonably over varying time frames compared to other categories. please refer to the disclaimer on the slide. It is natural for investors to expect that the multi-cap category offers more balanced exposure to large caps and mid caps. But our study shows that historically, among the three mutual fund categories, large cap and mid cap, and multi-cap funds, it is the large and mid cap fund category that offers meaningful exposure to large caps and mid caps. Successful equity fund investing is about getting the right mix across market cap segments. When invested in a prudent mix, large cap with their consistency and mid caps with their growth potential can deliver higher growth at lesser volatility. Under normal circumstances, the indicative asset allocation of the fund would be 35% to 65% in large cap companies including derivatives, 35% to 65% in mid cap companies including derivatives, up to 30% in other equities and equity related instruments, up to 20% in debt and money market instruments, up to 10% in units issued by REITs and InvITs. Baroda Large Cap and Mid Cap Fund will be managed as an all-weather equity fund that has a diversified portfolio consisting of high-quality stocks at reasonable prices, maintains disciplined allocation between market caps, pursues bottom-up approach for stock selection and top-down approach for sectoral calls. Mid-cap stocks with high growth and returns shall be preferred. Baroda Large and Mid-Cap Fund is suitable for first-time investors looking for equity exposure with less volatility, investors looking for wealth creation over long term, investors looking for a diversified blended portfolio with above average return potential with relatively less volatility, investors looking for an optimal market cap allocation fund. Why should one invest in Baroda Large and Mid Cap Fund? The fund offers an optimal mix, consistency of large caps with the growth potential of mid caps. Changes in market cap exposure can be done if a sector is doing well or reduced during a downturn. An inbuilt discipline of market cap allocation, minimum of 35% in large and mid cap sector each, helps in giving better risk-adjusted returns. The diversity of the investment strategy helps it to garner significant gains from mid cap and provide stability through large caps. Exposure to large caps helps in restricting the fund's downside and keeps volatility in check. The flexibility to invest across market caps and sectors makes it an ideal fund to ride economic and sectoral waves. Baroda Large and Mid Cap Fund NFO opens on 17th August 2020 and closes on 31st August 2020. The fund management team is led by Mr. Sanjay Chawla, Chief Investment Officer, who has over 30 years of experience in fund management, equity research and management consultancy. Baroda Asset Management India Limited, the investment manager of Baroda Mutual Fund, is a wholly owned subsidiary of Bank of Baroda and is positioned to serve the varied asset management needs of investors in India through a range of equity, debt and money market offerings. For more information, please contact your branch manager or call your financial advisor. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.